Good afternoon from still sunny Sydney, and welcome to the European market preview. Okay, guys, topsy-turvy world that we live in. Saw a complete reversal of yesterday's Chinese action, certainly from the currency's point of view. I suppose the best thing to go over to is the dollar China for the first up move, and here it is. Smashed lower, so we saw a reaction from the Aussie, of course. Aussie hanging around sort of 70-20, 70-30 after retail sales came out basically as predicted, and then shot up to a high. Let's just have what we call the high on Reuters there. It's not telling me, is it? Let's pop this out. There you go, high of 74, back hanging around 70.50. Wouldn't surprise me if there's a little bit of option action helping out with that move back to 50. It hasn't moved far away from 50 for the last couple of hours. So basically, we now have to look at what's going to happen ahead. Do we see a bit of a retracement in the European and then the North American stock markets? Having a look at this, Nikkei sort of flat really, but there's the Chinese. They recovered. Don't forget they were nearly 8% down yesterday, so they've recovered. That's 3% and 2.5% respectively on the Chinese stock exchange. So a bit of a recovery. Nice little move. Euro got smacked back down again. So this is where this whole confluence of currency reactions to the stock market moves is coming in. So Euro hanging up here nicely above the previous trend line, which came in around about 109 sort of 20ish, broken above that, nice, got forced back down below it. So we draw the new trend line. That gives us our next line of resistance. So probably looking to get short around 109.20 if we're going to see a continuation of this movement through the market. But of course, that's not our only consideration tonight. So there's a couple of bits coming out on the fundamental data release. As I mentioned earlier, retail sales in Australia came out pretty much as expected with a revised slightly up, which gave the move to the top side a little bit more support. We've got a few secondary bits of data coming out in the European section. So German industrial production, French industrial production, trade balances in both of those countries as well, plus the trade balance in the UK. And then we move into the good stuff. Couldn't have a beginning week without non-farm payrolls. So unfortunately for the Canadians, again, unemployment rate, unemployment change comes out exactly the same time as non-farm employment. So that's the big number. Expectations is for 203. A lot of people have sort of talked down the importance of the non-farms this week because there's been so much focus on China and therefore what's happened to the equity markets. But I'm still seeing it as a massive number. I still think we need to look for mine, Yep, so as I was saying before, I was quite rudely interrupted by some of the chaps leaving. Unemployment change in Canada at the same time as the big non-farm numbers coming out. I think they're still very important. I think the market still wants this direction. A lot of people are seeing this Chinese move as a massive capitulation of their markets. It could just be a blip. If it is, then we're going back to looking at what the US is doing. And don't forget, the majority of currencies, we're still going back to look at what the US is doing. So if we get a strong number from there, I think that adds to us buying dollars across the board. This could see Euro trail off quite significantly back towards this sort of support level around 107.20. It would add to the downside momentum we've seen in the Aussie, the Kiwi, and probably the Sterling as well to a certain extent in that session as well. A lot of the currencies cabling at the moment. I mean, we've just got a horizontal line because it's miles to the next decent trend line support. So around about 145.50 is probably the support. We're right in the middle of the range. If it sits there, it does give us an opportunity to get stuck in. Don't forget, liquidity is still prime in the cable, especially over non-farms. But you could see a very, very quick 100 points either side. Dollar yen's obviously going to be the funny one. Left this trend line here. It's a form of support trend line. Look how it adhered to it for the last few sessions. So broke down through, came back, hit exactly on the trend line, down, back up to the trend line, down, back up to the trend line, down. Broke through today on the back of the China, I suppose, surprise for the market. So I'll be taking that one off and then keeping an eye. But just hanging at the bottom edge of this this cloud at the moment, and I think it'll be looking for fresh direction out the European stock markets before we see the next move there. And plus, of course, you've got a pretty quick 100 points in dollar yen, depending on which way the non-farms come out. So be aware, as always, when we're talking about non-farm payrolls, pull back your trade size, pull back your parameters, or expand your parameters. Sorry, so make your stop losses that little bit bigger. Look for more out of your trade as well. If you're normally looking for 50 points, you should be looking for 100. If you're normally looking for 75, you should be looking for 100, 125 points. Be aware that's going to happen. And obviously, with regard to your capital management, pull back on the size of your trades, because you're going to make as much money or even more with a smaller trade, because it will move that much quicker. If it comes out on expectation, then maybe just pull your orders, and then I think just take it, put your feet up, and Monday's a new day for you. All right, guys, have a fantastic day. The boys in London will be in soon for the T4T members. Feel free to give us a chat in the trade zone. If not, whip us an email to info@tradersfortraders.com. Have a fantastic weekend. This is Nick Twidale signing off from the Sydney Trade Floor. Cheers, guys. Bye-bye.